Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Russian wheat export prices rose sharply last week ahead of a new export tax imposed by one of the world's largest wheat exporters from mid-February, analysts said on Monday. Moscow is trying to curb domestic food inflation triggered by the COVID-19 crisis by introducing a range of grain export taxes, with the wheat export tax of €25 a ton from February 15 to March 1 set to double from the start of March. Russian wheat with 12.5% protein loading from Black Sea ports for supply before mid-February was at $298 a ton free on board at the end of last week, up $23 from the previous week, the IKAR agriculture consultancy said in a note.
Analysts have raised their European carbon market average price forecasts for 2021 and 2022 after record highs this month on growing confidence in the EU's emissions trading system and soaring gas prices that drove up the cost of carbon permits. EU allowances are expected to average €39.24 a ton in 2021 and €46.24 in 2022, according to a Reuters survey of 8 analysts. That is up 3.6% and 11.1% respectively from forecasts in October. We had to revise our price expectations significantly due to the higher base the EUA reached end of 2020, beginning of 2021, said Virtus analyst Bernadette Papp.
Moving on to the top news in the energy sector.
China's refineries posted record throughput in 2020, processing 3% more crude oil than a year ago, as they took advantage of low prices and healthy margins on a quick rebound in domestic fuel demand from the coronavirus pandemic. Annual throughput stood at 674.41 million tons in 2020, or about 13.45 million barrels per day, up roughly 410,000 barrels of oil per day from 2019, data from the National Bureau of Statistics showed. December output rose 2.1% on the year to a monthly record at 60 million tons, or about 14.13 million barrels of oil per day, a touch below the daily record set in November, which has one less day, at 14.2 million barrels of oil per day.
Oil prices fell on Monday as a stronger dollar, fears over soaring COVID-19 cases around the world and the slow pace of vaccination against the virus outweighed a better-than-expected quarterly rebound for China's economy. Brent crude was down 16 cents, or 0.3%, at $54.94 per barrel at 14:45 GMT, and West Texas Intermediate U.S. crude fell 10 cents, or 0.2%, to $52.26. Corona-induced economic fears, a stronger U.S. dollar and more pessimistic investor sentiment are all playing their part in the fact that Brent is trading around $3 lower than last Wednesday, said Commerzbank analyst Eugen Weinberg. Moving on to metal price moves. China's aluminium production in 2020 rose 4.9% from the prior year to a record 37.08 million tons as smelters cashed in on soaring prices, with December output hitting a monthly all-time high even as the rally cooled. Primary aluminium production in December was 3.27 million tons, the National Bureau of Statistics (NBS) said on Monday. That was up 2.8% from 3.182 million tons in November, which had one less day, and beat the previous monthly record of 3.2 million tons in October. Full-year output in China, the world's largest aluminium producer, surpassed the last annual peak of 35.802 million tons for 2018, Reuters records of NBS data show.
Copper prices rose on Monday after a strong economic reading from top consumer China confirmed a growth trajectory that has underpinned demand for industrial metals. China's economy grew 6.5% year-on-year in the fourth quarter, beating the 6.1% forecast by economists in a Reuters poll, with its recovery from the coronavirus crisis expected to gather pace this year. 3-month benchmark copper CMCU3 on the London Metal Exchange gained 0.4% to $7,978.50 tons by 1700 GMT. We will now look at the top news in the agricultural sector. China's pork output fell less than expected last year as it recovered from the impact of an incurable hog disease that depleted breeding stock, official data showed on Monday. China's 2020 pork output declined by 3.3% from a year earlier to 41.13 million tons after plunging 21% in 2019, the National Bureau of Statistics (NBS) said. Some analysts expected a bigger fall in 2020 after an outbreak of African swine fever hit China in mid-2018 and meant the country's breeding stock had declined an estimated 60% by mid-2019.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.